So the first question I want to ask you is a little bit a mix of cricket and investments. How should one approach 2018 in terms of investments? Should you look at it as a T20 match, fast and volatile, or a one day which is less fast, less volatile, or a test match, slow and boring but definitely fruitful if the result is in your favor?
So if you are a trader, market is T20. If you are investor, market is always a test match. And in this test match, there is no 5-day period. There is no limitation on inning. You can play as many innings as you want. You can play for as many days as you want. And if you are somewhere in between, then maybe market could be one day for you. But what I have seen is that ultimately the metal is proved in the test match. It's not T20, it's not one day, it's the test match which makes you money. It's the test match which makes your wealth. We have seen that when markets are less volatile for a period of time, invariably it gets into complacency. And today, anecdotally, there are many people who are investing in equities, assuming that equity is safe and fixed income is risky. Now, when that kind of complacency sets in, even smaller events could create volatility. Equity by nature is risky, and by nature it is volatile. If it didn't get for about a year, it doesn't mean that it won't repeat in the future. My expectation is that calendar year 2018 volatility will be higher than calendar year 2017.
Now, last year we saw that domestic money was the predominant factor for driving the equity markets upward, while the FIIs were sitting on the sideline. Do you expect that phenomenon to continue or change in 2018?
For first 25 years of my working career, I always used to pray to the God that today let FIIs be a buyer that will push equity prices up and my investors will make money. Last 2 years, I have been praying to the God that let FI be a seller so that I will be able to buy stock at a reasonable price and make money for my investors. I think from a flow point of view, today domestic liquidity is bigger than FII liquidity. But from a size point of view, FIIs are bigger than domestic institutional investors. At the end of the day, stock market doesn't differentiate between DII versus FII. Our objectives are the same. We want to make money for our investors.
Let's shift focus from equities to commodities and specifically oil. Today morning we saw that Brent was almost at $70 per barrel. How do you see this impacting Indian markets?
So one, higher oil prices are negative for India. It results into widening of current account deficit. It has adverse impact on inflation as price rise is transferred to the consumers. It also results into higher fiscal slippage for the government. So clearly, oil prices, if they remain at elevated levels, is negative for India. Today, a larger portion of oil price is driven by the disruptions getting caused in Saudi Arabia and Iran. So it's more of a political tension than the demand-supply mismatch. There is a spare capacity which OPEC and non-OPEC producers are controlling, and hence oil prices look well balanced in terms of demand and supply. So limited point, if oil prices remain elevated for a longer period of time, that will be better for India. If they go up and then come down in a short period of time, we can manage it.
One final question. What are you expecting from the Finance Minister on 1st of Feb, and one key sector that you'll be watching out for?
So we do expect Finance Minister to honor path of fiscal prudence. He has brought down fiscal deficit from 4.5% to 3.2%. There is likely that there will be slippage in this financial year, but the glide path of financial discipline should continue and fiscal prudence should be honored. From an equity market point of view, we don't want any tinkering with long-term capital gain. There are rumors about it, and certainly that will not be well received by the market. But most importantly, from a sectoral point of view, we think government will focus on executing projects in infrastructure side, in rural India, in agriculture. And that sector of agriculture, rural and infrastructure should continue to outperform in the run-up to the election.